Good afternoon. It's Scott Henderson, shooter. Today is November 5th. 22 days, I think, till Thanksgiving. My goodness, does it come quick or what? And at the end of today's presentation, obviously, please review our disclosures. These are digital projections. Prior success does not necessarily dictate future results. So, of course, please do review that. Let's jump right into it. Let's start off with the S&P 500. I know everybody wants to know, and then everybody wants to know about crypto today, probably. Okay. So we're hearing a lot of noise and we're seeing a lot of noise in the tape. I mean, a lot. And we have different things that are happening. And I'm just going to do a little backdrop as I'm talking about the SPY. And I'll give you an example. What has stood out in the news for me, and let me just confirm you guys can see my chart, right? I'm going to give me a yay. Check, make sure I click the button. Should be there. Perfect. Now, what's standing out is we have this debt roll that's going on. We have, I don't know, $3 trillion maybe in debt that needs to be rolled. And we're now starting to see almost on a weekly basis that companies are closing their doors or shutting down. Six Flags, for example, couldn't roll their debt to stay open. And the reason being is in the past, so many of these companies have stayed afloat by borrowing money. And now they can't borrow it at the rates they were able to buy it dirt cheap and be able to skim off, some profit. So they're making decisions to shut down. And we're going to see more and more of this. Now, in addition to what has started to happen in the banking sector out in the Midwest, we now have had the fifth bank that has stopped all new lending. Now, that's significant because what that means is the plumbing is starting to get a little clogged in certain places. I don't know that it's going to become a financial crisis. Clearly have some clogging going on in some cities. And one thing that I heard out of Houston, which I think is very important, is that new construction apartments, which wasn't even on my radar, there are 15 new subdivisions that have been completed and built on their initial construction and have not been able to roll debt, and they're in foreclosure. So that said, I see a lot of noise out there with potential risk to the downside. Now, what I have on this chart, I have the Lux Algo Fibonacci tool here, which measures the Elliott wave correction. I don't necessarily agree with how it measures the wave. Let me just clarify that. In other words, this beginning of the wave to this wave is shallow. I'm measuring it up to 728, and Lux Algo doesn't measure it that way. So to me, there's a skew. Very much like there's a spread and an option. So, however, what I do find accurate is the fib correction line. And that coincides with my thesis. There are roughly 5 golden boxes. Most of the time, like over 70% of the time, we land in those 3 boxes. So they're it completely aligns with my golden box thesis, which is why it's there. But so my projection is that we continue a little bit higher. I think if this shelf breaks, which really isn't till this 652, 67, I think this is just noise. We've already wicked off the low. So, at this point, it looks like it was over, just like a one-off kind of thing. And I think that's the case until we get the big news, hey, these banks are failing. When we get a big list or a big bank, that might spook the market. So I'm thinking it has to be a pretty big caliber. But as more of this builds, one of my themes is sort of an XABC pattern, maybe. We come in here, we put in our high, we get into this range, and we just do this. Now realize the symmetry of that wave is, would roughly be 6 months as far as a timeline. So literally, we could get in this place going into 2026 where we're just stuck in this flat top and not go anywhere. Sort of that stagflation thesis. RSI isn't really telling me anything. We've got sort of I'm looking at this as, peaking drive 1, peaking drive 2, peaking drive 3. So I'm looking at this as wave 1 in RSI, and then we got to retrace. So I'm looking at this as peaking drive 1 in wave 2. So we should get a equality, something similar, spread and distance, just like we got here. Maybe up here around 74.61. However, it could be a divergent number as well, and still do it, still print, and we still continue to squeeze. And then we should still get a third one. So I'm seeing this rally going until mid first quarter 2026. That's sort of my thought, unless there's a catalyst to take us out of it. All right, so let's look at the NASDAQ. Much deeper retrace, at least from Lux Algo's standpoint, where I see a little buy side. Now, by the way, just so you guys, when you see these labels, buy zone means it's a zone where buyers will step in. It doesn't necessarily mean it's a big buy. Big buy zones is where we want to add a full third position size if you like this name. We want pieces at buy zone, okay? And now on this particular chart, I don't have one, but like for example, I would have a bigger buy zone. I'm just going to copy this for shoots and giggles reasons just to show you. So now this you will see periodically on a chart, and forgive me, I haven't gotten all of my charts to this. And you will see the comment very unoften, huge buy zone. That is a back to truck. I couldn't figure out how to put a truck there. If I could have put a truck there, I would have put a truck there because Kirk wanted me to put a truck there. But we weren't able to find that. No. Government, Tom, the government shut down, who that's affecting, and I don't remember the exact number of employees, is none of them are getting paid. My daughter's boyfriend works for the Defense Department as a contractor, and he hasn't been paid. So that has a trickle-down effect. Whatever that percentage is, that might be what we're seeing in the jobs numbers, but we're not seeing a huge kill on the single household. I mean, we're seeing a reduction in spending. Chipotle noted that, McDonald's noted that. Clearly the 25 to 35-year-olds have clearly slowed down. Maybe even a percentage of those has stopped. But realize we don't know how big of a chunk that is from the government jobs, because realize I don't see that number. I really, to be candid with you, I don't know how to see that, or I don't know a source for that number to break it down into age groups and categories. Is how big of the federal employees didn't have savings account and actually have stopped spending at this point. I would suspect that their payroll is a little higher, so I would expect not much. So, but back to the NASDAQ, so we get a pull back, and this is our top, and I'm sort of shallowed this out because I'm sort of measuring the projection of where our fibs should be based on the slope. So I expect us to start rolling over here, and then we should build out and put in one final push, and then break down. So I still see the NASDAQ going to about 700 before we get that big pullback, without a catalyst, of course. And obviously this, even though I can't move this fib tool, obviously those fib retracement levels that we have here will move as the tape and price moves up. So it will adjust. So in that sense, my wave targeting with these fib retracement levels should be pretty accurate, just for your reference. All right, let's go through some names here because I got a big list today. All right, so last week's article. Now, I'm going to say, hold, it broke below that shelf. I'm going to say, even though we wicked down here, doesn't look done to me now. I'm going to say there's a chance that we come back down here. We also have this potential head and shoulders on this one. So I would say that the look to me says maybe an impulse down now. So, however, I can't say that I'm wrong. The challenging part is this sort of tight, sort of an ending diagonal. So, we could do this and be done. All right. The challenging part is this ledge right here. See, we've already broken below this high. So we don't have any structure. We don't have any support. There really is no support. The only support we have is this sell side imbalance, which all it is really, and I'm measuring tight because of this first candle. I mean, technically it's up here. But I went down and measured tight because I'm like, bottom side of it with that aggressive move. And this candle sort of motivated me to tighten it up and say, nah, the big buy zones are here. So that's where we want to start adding a full third position size down there if we get back down there. That's my take on RBRK at the moment. VIRT. Now, this was my top pick last week, and ironically, it's the only one that ran or pushed on the bullish side. And I liked it because of the look. And I'm just going to come out to the monthly look and the structure here. So we have this flag pole, right? This flag, right? And it's broadening. Okay. So, my thought was it took this out. This shelf still held. Notice how we wicked right down to this shelf, right? But didn't take the shelf out right here. So that is really where our support is. So as long as 3078 doesn't break, this thing's bullish. Now, the ironic thing is this is only wave one on this leg. So realize this is our impulse. So this is peaking drive 1. Roughly this grouping is peaking drive 2, and then we got a peaking drive 3 to complete out wave 1. So we have this much larger impulse wave that we are in. So that is why I really like this. And it's euphoric. I like that euphoria look kind of thing. So we're going to come in. We literally could do something like this, getting up to the 3618. So, it's got quite a little bit of upside. I still like it. Still my top pick. So figure out how to get a position on in there. It's on the punch card stock. So, of course, I like it. All right. Looking at FANG, really hasn't done anything. Sort of flat. As long as we don't break below this 135.02, try to scale a position. Notice my third big buy zone is down here at 114. So that's where we want a third position size. Otherwise, it's small pieces along the way. That's my thought. NTNG. Now, it's challenging because of the look. Okay, so we got sort of our peaking drive 1, peaking drive 2. Is this peaking drive 3, or is it going to be way up here? Reason is because equality, just giving you how my mind works, so I'm always looking for this. So the breadth between wave 1 and wave 3 is what we want to look for 5, or on a bad day, it's going to be about 75% of that. So we should have an extension to roughly the 1382 fib as far as the look on this. Now, the way I drew the impulse wave was a flat rolling over scenario. So I only was thinking that we'd stay in this band, sort of a conservative play. But it's probably a really good play to sell some cash secured puts on because I don't see it moving that much here. So, and the premium was decent on those. So that was my thinking. Again, note where my buy zones are. So I don't really have the, hey, third position size on at 51 bucks noted on the chart, but that's my thinking based on those zones. Hopefully that makes sense. By the way, any comments or critics on that, whether it works for you or doesn't, please let me know. That way I can get better at what I do and projecting what I see kind of thing. So peaking drive 1, peaking drive 2, nice foundational wave. I mean, nice, just building trend. The challenging part of trends is when you're looking at your base, where your trends start, you have to really come down to RSI and look for your peaking drive, to see where your threes are. Notice how the equality. So there's a 5 wave here, right? And then there's another 5 wave here that's inside of that. But you really can't see it in the trend unless you come down here and look at your peaks in RSI. So that's sort of the look. I think we might get a little bit more of a pullback here. Maybe do about 942. Main reason is we broke this volume-based shelf that I have noted up here. So the first buy zone, not the big buy zone. Big buy zone's way the heck down here. So I'm thinking a much smaller position size on this, but again, it's on the punch card stock. So let me jump into it. All right, so go to names that you guys requested. And actually, I requested a few this week. I want to look at Google. Okay, now this is relative strength. Note what RSI is doing. Note this confirming high right here. So this was our confirming high. So this is 2. So for the moment, what we're looking for is a 3. Roughly about equal to this as far as a push to the upside. So that should put us up around 333 from where we are now. Well, a $40 move in Google with options is a nice move, even if all we're doing is selling cash secured put. Now, I don't really want to encourage cash secured puts at this type of an elevation, but we get any pullback to this shelf, note, maybe you want to buy it as a conditional order. Price hits 270, you sell some cash secured puts, sort of put it in a good to cancel order that way. That way you catch a piece to the upside. This is one of the stocks, which is why I brought it in this way. And I don't know how many months I've been preaching this now, as a matter of fact, I think I started way the back here at 168 bucks or 165 bucks, and I kept throwing out my argument as why this was going to be a market leader. Well, it's become a market leader for the same reason that I outlined. And I think it's going to continue. And I'm going to come out to the monthly, and the moat is absolutely just huge here. And when you look at it from a big picture, big standpoint, and you look at all of our waves that are in here. So structurally, if you're coming in and you're just drawing your waves from the base, this is 1. This is going to be 3. Then we have 5 that comes in up after that. So where the heck is that? That's up at $1,250 from a $200 stock. We have the catalyst. We have the moat. Honestly, this is a more important stock to own than Berkshire Hathaway, just to be very candid. I mean, it has the engine behind it that's going to drive it. So we want to figure out how to have a full position size in Google if we don't. All right. Now, I also brought in SRPT just because it's a solid 50% back candidate, primary wave setup, right? Pulled back just a little bit more. Again, this is one I think we want to make sure we try and get a position on in bio. Now, I don't particularly like bio. And you'll hear me argue that multiple times. And the reason is I don't like getting black swanned. I don't like getting trumped. And unfortunately, when they pull their trials, what do biopharms do? Pharmaceuticals do. They dump. All right. However, after this kind of a dump, I'm kind of okay with taking the risk kind of thing. All right, so let's jump to some more names. Rocket Lab. Let me come out to the weekly. We get a good number here. Now, it's holding up well. It's starting to roll a little bit. So my assumption is this is our peaking drive 1, peaking drive 2. We get a third peaking drive up here right around 90 bucks. Then we have a decent pullback maybe to 58 bucks. Now, could I be wrong? Yeah, this could be peaking drive 1. This could be peaking drive 2, and we could have already put in peaking drive 3. Where you know that's the case is if we break below this 54.28. This shelf has to hold right here. We don't want to break the body of this candle, that one right there. All right. If that's the case, we're going down to this shelf. That's structurally what we're looking. Now, note that my big buy zone is way the heck down here. So I've noted. So when on a chart, when you see multiple just buy zones, that means that is a zone where buyers will come in, right? This is really where we want to enter that trade. And I hope that's clear. Okay, let's look at AST Space Mobile. Now, Lux Algo here is probably correct. We probably get a pullback to this 59 bucks or 50 bucks here, structurally. Reason is we've just wicked below twice, actually 3 times that ledge. So that really is not support right there. So our next support is going to be here. That really is going to hold kind of thing. It's 61.26. That breaks. Then we're going back to this buy side imbalance zone right down here. So that really is our first buy zone right here, right there. Then obviously if we come a little bit deeper, and now just so you guys know, technically the best way to measure these is on the daily, but it makes the chart so busy that it's hard for to project. On my charts that I'm trading from, I have the imbalance zones marked based on a daily candle, not the weekly candle. So the big buy zone isn't really down here until about 28 bucks. That's sort of my look. So I would expect us to pull back. So if you are holding, covered calls is a good call here, and you're probably fine buying some time, 90 days kind of thing, and you want to be just above where your high price was. So maybe 105s, and then just rinse and repeat based on where we are. Or flip out of that and maybe even buy some calls if we get down to this 618 fib. That's a spot I would like to start adding as another piece, even before this buy zone, because symmetrically it looks to me like it's going, and I think it even might hold this trend support. Again, the catalyst here is space as a service. I have a very hard time grasping how big that actually will become because its significant success is totally tied to third world implementation of phone access and internet access, the underserved markets that there. And unfortunately, there's a large chunk of that that's a poor market. So they're not going to be able to pay, the 74, I think that's what my phone payment is now, 74, 75 bucks. Those markets are not going to be able to pay that kind of fee. So it's going to be a low dollar tier, a lower quality. And I don't know what the margins are to be able to break that down. That's just my 2 cents. But I still think the catalyst is there. This is one of the longer trends that I think we're going to shift. And I think AI will just accelerate. All right, looking at TSHA, we actually have this new buy zone developing right here off of this sell side or buy side imbalance. We also have the sell side imbalance that sort of comes in right here. All right, the next big buy zone to me is actually back down around 116. I don't think it goes there though. Reason is peaking drive 1, peaking drive 2. So I'm thinking peaking drive 3 comes up here. So structurally, we should get something like this here, and on a bad day, maybe here. So $8 maybe from here. It's got some nice upside. Microsoft. Now, Lux Algo likes this to dump. It could be peaking drive 1, shallow double top, buyer exhaustion candle broke down here. So it needs to get back above this 531.55, and it really needs to hold this shelf at 498.85. If 498.85 doesn't hold, the 618 is totally viable for a retrade. Now realize this Fibonacci is measured from this trough to this peak. So it's measuring this one leg. So equality, the golden box is like right here. So let me just bring it back. Yeah, that's the golden box right there. So the 50% back is the most likely retrace for me, unless it's shallow and euphoric. And I would not say this tape right now is shallow and euphoric. So, however, the buy zones, let me just steal this again, move it back over here. Your first buy zone is really here. It's kind of a big buy zone just because of this leg. There's really nothing below there. The next zone is going to be way the heck down here, and just measuring those points. So that's where we really want to buy it. And the next one is way the heck down here at this shelf. So there's a substantial difference in that level. And whenever you have those kind of gaps, the simple truth is that that's how institutions are going to buy. They have prices noted on their chart. They operate off of a daily or a weekly chart. They never look at a shorter duration, period. They enter off of a daily and a weekly chart. So that's one reason I use that for my markers. So if we fail at 341, they're not interested in buying this. They're trimming positions all the way down to 237. I mean, that's just how the institutions view this. So Microsoft might be done. RDDT, Reddit. Boy, they just had a really humongous move. It really has. And it's technically trading it. The challenging part is I don't like the broadening formation that's to add anything because it really didn't finish to the top. So it's not done to the top, but this last high here kind of killed that thought because it's waning. Now it's coming down. So the next buy zone really where I get interested looking at that formation is about $134. However, again, this is where dip buyers come in. So about 170, we should see a bounce. Now, whether or not it's going to be strong enough to take out this high, yet to be seen. But if you don't have a position, and that does happen, you want a full position size when we close above on a weekly of 231. That's sort of my thought. Yes, on AST Space Mobile, I'll let them expire or roll or whatever happens. All right, let's look at ALAB. Challenges the symmetry here. Here again, we're looking at another broadening type formation. And, I need to figure out how to get audio on your comments. When you post answer a question in chat, I'd love it if just verbally would speak out and say, hey, are you still holding AST Space Mobile? That way I'm not delayed in the video. But, get real interested down here. Realize this is peaking drive 1, peaking drive 2, so we likely get a peaking drive 3 up here. The question is, do we get a retrace first, or are we going to test the lower broadening formation here or here? That's the question. The big buy zone for me is down here at $60 based on structure. I don't know that we're going to get there. You have a confirming high. You had a confirming high here. It took it out, right? So what do we expect? At least one more divergent higher high in price. Well, if you measure your distance between here and here, and you assume minimum of 75% of that, we're looking at a $405 stock from here, and it's $1.83. I mean, nice move. I like it. We want to figure out how to get a position on that, I think, and keep it kind of thing, because I think it will continue to grow. Now, swinging around the edges on that particular tape is a little challenging because the options are expensive. So selling premium is a good thing, but buying calls, it can be very expensive if you're wrong. So you just want to keep that in mind. NBIS. Now, it looks to me like we're done. And the challenging part is this peaking drive 1, peaking drive 2. But I do not like this collection of red candles. There's we got a one attempt, and we had buyer exhaustion that came in here. So it's kind of shallow. Realize maybe symmetrically, compared to this low, this pullback, that would be about what we should get, right? However, I'm measuring it at the 261.8. And realize when I analyze the chart, I'm looking at, okay, where could it go if this wave continues? What's the history of those waves? And what are the standard deviations? So if I come in and let me just pull, and I don't pull it up that much simply because the range on the Bollinger Bands here is freaking outrageous, right? Just the extreme, right? So, I'm measuring the two upper bands and the two lower, right? We're already skirting the third standard deviation on this price. So what's that telling? Well, here's where we skirted it the last time. What's that telling? It came way the heck off. So, that is one simple tool to look at. Once we are in that third standard deviation, it's really hard to add or build a position. So here in this situation, I would probably at least be selling, just because of this zone right here, I would probably be selling some 125 covered calls if I owned a piece. That's what I would. Now, it breaks below this next shelf down here, I would be trimming at 107. I would trim again at 100, right? If it breaks below this 90.69, I would be out. That's my thought. All right, let's look at ETHU. Now we have two nice buy zones right here. We just wicked right into it, right to 50%. Nice seller exhaustion. However, I can't tell you right now, the read on crypto is really hard right now. It really is. It's almost like Congress isn't going to support what we need moving forward. It's almost like there's a roadblock, because realize the whales in crypto are bigger than in stock. So crypto is absolutely totally manipulated by a handful of maybe 75 people. Everything. They are more connected. They sit like at a round table and they have discussions. I wouldn't be surprised if they have Zoom meetings every week. Okay, we're going to sell this week. Everybody sells. Okay, we're going to buy here. Everybody buys here. I would not be surprised. And because the way the regulations currently are coming in, until we get an actual bill that regulates that. And the only bill that is even successful is on the stable coins. So it doesn't address the rest of the market. So it's still the wild, wild west here. So the only thing that we can look to is what those whales are doing. And, we've seen wallets open up that haven't been open in 10 years. And we're seeing a lot of them. Well, the question is, what are they doing? Are they actually selling, or are they moving to something else? That's the question. So we've had this huge pop. And let me just technically, we've broken our first shelf, that 108. We now have come down and tested. We pierced it. Our next shelf, right? So our next shelf really is down here at $58. So for me, my big buy zone is right down here. It's down here at $45 where we are now. Now, that means it's going to be one heck of a broadening formation, and that's what I have measured right now in my impulse. So I'm looking at that. The challenging part is this is peaking drive 1, peaking drive 2. So we will get a peaking drive 3 up here. Question is it going to be a flat? I'm being conservative and saying it's going to be a flat, right? And then I can choose to change my mind later because it's going in the same direction anyway. I just don't want to come in and say, okay, yeah, I think Ethereum's going up to $550 here. The technicals are telling me we're more likely to build out a flat. And that's sort of my thought on that. Hopefully that was helpful. All right, UUU. Now, this shelf has to hold. And again, maybe I'm disconnected, with heading out for the funeral and everything. I don't recall any news that in the last couple of weeks that would have my bias in one direction or another. RSI is confirming. MACD cross kind of looks like it's putting in wave 1. So it's confirming that this is the first leg. The question is, are we going to be done at the shelf, or are we going to go to our next shelf, or are we going to go back to the big buy at 750 before we start the next leg up? I don't think the thesis of uranium has changed. However, we just had the first permits issued for a rare earth refinery, but it's not functioning. And maybe that wasn't big enough for us to hold price in uranium. That's the only thing I can grasp at right now, because nothing else stands out to me. So that's sort of my thought. I think we do continue towards putting out this flat. I think it's a safe place to park, especially if you were in it since $7. Maybe sell some covered calls here. That would be my thought. All right, UPST, it's getting close. We're getting close. Let me go out to the monthly on this. It's gonna bounce. It's just it's gonna. The question is, are we gonna come down here and hold this confirming trend support? And we haven't. So the concern is, how deep is that gonna go? So coming in with a fib tool is the only way really to get a grasp on. So we're just gonna measure this leg here. And just for shoots and giggles, I'm gonna move it over to the right we've already passed 618. We've tested the 78.6. So that means we take out this 660.06. We're going lower. We're going to probably test this zone. And that gets taken out, we will go lower because there's no support. So this becomes your first buy zone down here. So structurally, I don't really like UPST now, maybe like I did before, simply because of that. But if you also look at this, we have a much larger buy zone here, which happens to be a little broader here, but it happens to end in nearly the same spot. So we have this bigger buy zone in this area. That's challenging. So we're getting this overlap both on the sell side, and what I mean by sell side is when sellers come in and buyers lose control, or buy side is when buyers come in and sellers lose control. The zone that is probably most comfortable for me is back around 383 on this name at this point. All right, let's look at Ethereum itself. So structurally, I still see 74.52. However, we're in this, we barely took this stop out. I mean, we wicked to it. Notice that, wicked right there. We wicked to it. We've now got our third candle. That's orderly, okay? That's not orderly. That's not orderly. And clearly, this is not orderly. All right, it's expanding. right? Now, note, a little smaller breath, increasing, expanding breath. So this needs to stop now. We're at 50% of this candle. Okay. If not, it's probably going to expand further. And we're going to test this next shelf down at 2,500 from where we are now. That would be my thought. My first buy zone on this is not down until we get back to, based on this structure, so roughly, what is it, 21, 22. Then we really don't have, I mean, we have another zone down here. It's almost level to it. It's not as clean. I prefer clean, decisive, institutional involvement or not. It's not as clean. And note how the bigger buy zone here ultimately is shallower, or excuse me, that would be a big buy zone. And so we really don't even have a bigger buy zone on this shelf. It comes all the way the heck down here. So, there's a potential we get a reversion to the mean on, going to the first bigger buy side imbalance. Coming down here, we have some confluence. We had some confluence on a breakout here. We had a breakdown in that same range near the bottom of it, had a sell side imbalance, buy side imbalance, another buy side imbalance right here in this range. So the biggest buy zone would be way the heck back down here at roughly 210. I don't think it goes there, but that's structurally what I see as far as the look. All right, let's look at Bitcoin. Everybody wants to know about Bitcoin. What's Bitcoin doing? Well, it's doing very good. Actually, holding up really well structured. The one thing that I don't like is, maybe this was peaking drive 1, okay? Maybe that was peaking drive 2. This is peaking drive 3. So if it is wave 1, which is how I have it marked, right? Then we should get a wave 3, should be at least shallow to 162. We're starting to roll over. So structurally, that's intact. Now, note that we have taken out our first confirming trend support. So we're back at our first confirming trend support of this. So we are not building it. Let me say that again. So we are not building. So when we have our first higher low here, right? Confirming trend support works by moving to your next higher low, which is here, right? Then once we get our next higher low, which is here, we want to move up, all right? Now, that trend is what we want to use to keep our positions on. And we don't want to trim until that trend's broken. So this was our second anchor. We now came back and back tested it and it held. So it's pretty solid. So as soon as we got this candle we broke through, what we should have done is cut 50% of our position and then run a percentage trailing stop, which may or may not have taken you out at that point for the rest of the position. Then we wait for this to reset and we decide whether we're going to buy it back at 84. So earlier in the week, maybe even yesterday, I noted that I think 80K is a good price. I would say I still stand by that. MACD is rolling over. One thing I wanted to note here, looks like it has 3 peaking drives in MACD. Same thing with RSI, 3 peaking drives down here. All right. So structurally, it looks to me like it's toppy. Now, where do I get interested? Where do I really like it? So assuming this is our top, I really like it back at 57K. That's where our zones. So our imbalance zones, let me just draw them out here. We have our first buy zone, which is going to come in right about here. Then we have our next buy zone. I mean, we have one here. Actually, you know what? I'm changing my mind. I'm just doing a count. That is our first buy zone. So our first buy zone is at 67. Our big buy zone is going to be down at 30K. I don't think we get back down there. Something has to break. Then our biggest buy zone would be back down here at, man, it's only 1 o'clock and my hand's already tired with the mouse, guys. Actually setting up for this takes me about 2 hours going through the charts, making sure I've got everything in the right place so I can stay organized. So the bigger buy zone is probably about 20K. So that's sort of my thought. All right, let's look at TE. A beautiful chart. Beautiful. T1 energy, yeah, heading towards $7. We are seeing a little buyer exhaustion. This shelf basically, I'm going to say, yeah, it held this wick. The body is the most important part. So this 268 is what we clearly want to hold so you can get a back test there. If we do get back down there, it's a good spot to try a shot. Even though I only have 1 buy zone noted because we have no back test, none, anywhere on this leg, nothing. Okay. So, like for example, this is a back test. 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 We have nothing in this leg. So we really have no support to measure from outside of just saying, hey, this wave ends here. But the reality is the wave might not end here because we have no structural thing to really justify it. I'm just honestly guessing on this chart. As far as that looks very bullish to me. I think the 61.8 is the most viable target. Now, ultimately, what I've measured there, if I'm correct, is this is my trough, this is my peak, and this is my second trough for the Elliott Wave expansion tool. NVO. I don't like it now. Even though it's really not done anything, it's not broken below this low, 44.91. We clearly rejected price here, guys. I mean, clearly. That's the challenge here. The confirming low is here. It's on this candle. Then we did get a divergence. So the question becomes flushing drive 1, flushing drive 2, flushing drive 3. So is this your ABC structure? Which I don't think it is, right? So we get a B. That was one option that I had initially contemplated. Or is it an impulse? And an impulse wave basically gives us this. So we have this broadening. Where is equality? It could be done. It could be. I'm not going to say it's not. Broadening formations typically are shallow. There's really nothing that holds this up, though, that 45 breaks. That's the challenging part. You have just a pocket, a void, and it's very shallow support way the heck down here. That's the first spot that it'll hit, maybe around 36. So you're talking more than a $10 move on a $45 stock. So I don't know that I want you to hold that heat. So, keep that in mind. It's not a high priority for me. Where I get interested in the first place, I start getting interested again, it's got to get above this wick before I even like it bullish. So above roughly, what is that, $59 or $50? Then I'm not really interested in having a full position on until 62. That's my 2 cents at this point. All right, look at F5 Inc. Pull back here, just looking at this as a impulse wave, maybe 212. I think it continues here. The fact that we have this next really isn't a general candle. We are trying to hold this shelf, but it's already broken. So the next logical level would be for us to test this 233. Then if we start rolling, we start putting in like a jagged or divergent RSI, because chances are this is flushing drive 1. Notice that. Notice how it is high and tight. So we probably get a flushing drive 2, and then we probably get a flushing drive 3 here. So as far as a monthly candle, it's more likely that we break down here, maybe a little pop to our wave 4 at 254, but I think our target's going to end up being about 211. So that's my 2 cents on it. There are other charts that look much better. For example, PE. Okay. And that's sort of my thinking on that. Question, is it an ABC or not? That's the first thing. So ABC equality's still down here, 52. It might dump. It might. This held, closed above it. That was our first peaking drive 1, peaking drive 2, peaking drive 3, back test held, tested it, sliced through it. So that's clearly some resistance right there. We've tested that resistance again here, broke above it, set the next ledge. Once we broke below this low, this impulse leg was broken. So we got peaking drive. What we did was an XABC pattern. The challenging part is what that looks like. All right. That's the challenging part, what that looks like. And again, mixed bag. I don't know here with Bitcoin. 106 broke. Manage your risk. Best thing I can suggest. All right. With that, I'm going to call it a day, folks. Hopefully this was helpful. Please like and share my work if you want to do it. And of course, if you'd like to join me on Substack, feel free to do so. Great trading. Until next time.